So no, this cycle, the only thing I really trade is Bitcoin because I don't need to understand what's happening with Ethereum. I don't need to understand they're going to version 2. Every altcoin has some sort of scheme in their tokenomics to push the price up. And so all I need to do is read Bitcoin and get very, very, very good at trading that one asset. A lot of traders, particularly whale traders that are savvy, then go, yahoo, it's alt season. Like when Bitcoin's going boring, sideways, we'll just deploy and move that capital off into altcoins, and you'll see altcoins tend to go up when Bitcoin is sideways without the threat of it breaking out and going to the moon. Because when it's about to break out into the moon and go into the moon, whales aren't going to risk that and go into altcoins. But if it looks like it's range bound for a while, we're going to altcoins and we get your alt season. But having said that, I think that's kind of a dated, it's great, but I think it's also kind of a dated proposition because now we've got very well developed derivative markets and options markets that are slowly getting more liquid. And so you can also now just do the straddle trade. So you can sell a put and sell a call option. Because you can think of these options as they're essentially insurance policies. If it goes in a particular direction, they're very cheap to buy, and it goes in a particular direction, you get exponential gains on it. And so you match the two. You sell a put and you sell a call, and the two balance each other, and the thing goes sideways and doesn't break out of this range, you're making money every day. So that's an option too. It's relatively sophisticated. I haven't done it. I know it's possible, but I haven't really had time to investigate all the numbers behind it. But like, it's interesting in this cycle, this bull cycle, that Bitcoin, with its immense liquidity and all of the derivative markets we've got, traditionally what we've had in crypto is people using altcoins as substitutes for what you can do now, so if it's a bull market, rather than buy XRP Ethereum or whatnot, thinking you're going to get a higher run up in the bull market than just holding Bitcoin, you can just buy this other kind of shitcoin, and that's called a derivatives contract. So a quarterly's contract that goes long on Bitcoin, and so if you do 1x leverage, you get double the return. If you go 3x, then you get triple, and that really competes with something like Ethereum.
Right. Are you trading altcoins, or do you just keep it all to Bitcoin?
No, I don't trade. I kind of. I trade them a little. I've traded a little bit of DeFi to learn about it. Last 2017, I was degenerately trading altcoins, like ridiculous. Like I think at one point it was 90% in altcoins because it was just a crazy altcoin tulip bubble.
Dude, I did it, man. Did it, and I did really well for 8 months, and then really badly.
Yeah, I mean, once the bear side of it, all the liquidity dries up and you're screwed because you can't sell over positions. And, and altcoins, altcoins are like, you need to know what you're doing. Like each coin has its own thing going on. And you've got all these Telegram channels and all these, Discord, Slack channels. And you've got to have endless amounts of time to understand exactly what's happening with each altcoin, whether they're introducing this or that in their monetary policy. And so no, this cycle, the only thing I really trade is Bitcoin because I don't need to understand what's happening with Ethereum. I don't need to understand they're going to version 2 and there's the staking reward and they're going to burn burn, the miners reward, they're going to burn token, all these dynamics. Every altcoin has some sort of scheme in their tokenomics to push the price up. And so all I need to do is read Bitcoin and get very, very, very good at trading that one asset, and I leverage it. And then I'm good, right? I don't have to buy Ethereum. Like if I buy Ethereum and I'm trading Ethereum, well, I still have to know what Bitcoin's doing because Ethereum orbits Bitcoin and every altcoin orbits Bitcoin. So if you're trading altcoins properly, you need to know what's going on in your asset class, your asset, which is, the altcoin of your pick, and then you're really looking at Bitcoin because it's like two planets in gravity lock, and the little coin is in gravity lock with Bitcoin's movements, and so it's much more of a complex. It's two orders of, two degrees of investigation there. It's much more complex. So I can do this really simple thing, which is read capital flows into Bitcoin and get very good at it. And I can go up or down on that. If Ethereum, I can do on-chain analysis on that, and I can read capital flows into Ethereum, and it won't obey it, because suddenly if Bitcoin's going the other direction, it doesn't matter what the capital flow into that coin is. It's being pulled down by Bitcoin or pulled up by it.
Right.
So it's simpler for me to trade a long position on Bitcoin, and I don't need an altcoin anymore.
Can I ask you, in terms of your strategy, you might not want to share this, but what percentage do you just sit there as a stack, ride out the market? And what percentage is your trading, play, leverage, try and outperform the market stuff? Or is it all that?
It varies. The minimum is 15%. The maximum is 30. Even 30. No, 30 is maybe just above 30. When it gets above 30, I pull out and recalibrate, and I bring it back down to about 20 or 15. So it's like my profit take, and I put it back into my stack. So that's not recommended for new traders, by the way. And it's not recommended by normal technical traders. I think the norm is 10 to 20, but I trade differently because I'm trading what I do, which is on-chain capital flows, and they're very long-term trades for multiple weeks, and it's demand and supply based from fundamentals, and it's pretty much around 90% reliable, and that 10% where it's not reliable, it doesn't swing the other way quickly. I can check in on it on a daily basis, and then I can reduce my position or whatnot. So the leverage is very low. I don't usually go much more than 1x, which means that the price can go to half, and I don't get liquidated. Or it has to be, so basically it's got to be a black swan event, and then I'm in danger of liquidation. I just sleep at night with this thing going. Really, there's no, typically when traders trade, they go, well, I think it's going to go up, and if it goes against me, I'll step my stop loss here, and I'll exit the trade. But if it goes up, I think I might get a 3x gain versus a 1x loss. So a 3-to-1 ratio, and I'm going to enter that trade.